Hello, Accounting One. All right, today we are going to, we're still in part one of the book in MindTap, and we're going to go here to chapter 3. Click the down arrow for chapter 3. Journalizing Transactions. So today we're doing working papers for lesson 3-1 and 3-2. So I'm going to open up end of lesson review under 3-1. Okay, I'm going to working papers. Working papers opens up and it gives us work together and on your own. Both of these are on page 64 of your textbook. This section of your book shows you exactly how to do these transactions. First of all, we only have 2 transactions that we're going to have to put into the general journal. It tells us that Norma Dirks owns Dirks Copy Center. Using the information provided, we're going to journalize each transaction. We're going to put it in the journal. That's journalizing it. And this is from April of the current year. Use page 1 of the journal. It already has the number for us, so we don't have to plug that in. The source documents are abbreviated as check with a C and receipt with an R. Now we go up here and we have our 2 transactions. These are the same 2 transactions that they show you in the book for 3-1. This other tab, COA, is chart of accounts. Chart of accounts for Dirks Copy Center. These are the only accounts that we can use for Dirks Copy Center. You'll notice that each one has a number in front of it. That's the account number. And then it has the title. Has the assets all together, the liabilities. There's only one liability. Equity, owner's equity, capital and drawing account. Then you have revenue, which is sales. And you have expenses. And here for Dirks, they have rent expense, utilities, and miscellaneous expense. All right, so we're going to go back over to our transactions. And we have to record received cash from owner as an investment. Now, I'm going to show you, again, my trusty DC Adler. Okay, assets, drawing, expenses, liabilities, equity, revenue. This shows you which side it increases. That type of an account increases. Assets, drawing, expenses increase on the debit side. Liabilities, equity, and revenue increase on the credit side. You see where it increases. So the opposite side is where it decreases. The opposite side is where it decreases. Debits always have to equal credits. Always, always. All right. So we're going to go in here and it says the first transaction says April 1st. We'll plug that in. April 1st, you have to put the period after April. And it says received cash from owner as an investment. So the first thing I have to do is I have to figure out what 2 accounts are being impacted. What 2 accounts are being impacted by this transaction? And I'll make a T-chart for each one of them. One of them is going to be $2,800 as a debit, and the other one's going to be $2,800 as a credit. Well, first of all, I see cash. Cash is an asset. It says received, so that means it's going up. Assets go up or increase on the debit side. So this has to be cash. Now the other one says it's from the owner as an investment. So the owner is taking $2,800 out of her personal money and she's putting it into the business. This is ultimately to be paid back to her. It's an equity. And we call this the capital account. So now I'm going to go down here to my general journal, and my cash is going up. $2,800. Here I'm going to put Norma Dirks Capital. And you say, well, Miss Allie, where'd you get that from? Well, let me show you. Chart of accounts. I go under equity, and there it is, Norma Dirks Capital. Norma Dirks drawing is when she takes money out of the company to use it for her own personal use. But in this case, she's putting money in, so it's Norma Dirks Capital. That's where I got that from. So I come down here, and equity increases on the credit side, assets increase on the debit side. So my debits equal my credits. Now I'm not quite finished yet, because as an accountant, I know that I cannot post anything in these journals unless I have a document that backs me up. And right here is our document that backs us up. Receipt number 1. So it's right here, it gives it to you. Receipt number 1. Whenever anybody gives money to the company, you write a receipt for it. You give them a receipt for it. You record it and you give them a receipt. So even in this case, where Norma is giving money to her own company, she still has to write a receipt for that. All right. So I'll erase this stuff. All right, and erase this stuff. And now we're ready to go to the next transaction. The next transaction says paid cash for supplies. So I'll make T-charts. The first one says cash. The second one says supplies. Easy enough. Now I got to figure out which one's my debit, which one's my credit. Which is the debit, which is the credit. Now I know that both of these are assets. So one is going up. I'm increasing one while I'm decreasing the other one. They're going to offset each other. I hope that makes sense. Cash, you own it and it has value. That makes it an asset. Supplies, now you own them and they have value. That makes them a supply. One's going up, one's going down. Now it's on the debit side, which means that whichever one is going up, increasing, the one that increasing is the debit. So in this case, supplies this is the 2nd, April 2nd, so you have to put the date. It tells you that they use check number 1. So you have to list that as the document, the source document. Come over here and it's $415. Now, I want you to notice that the debit is always listed first. The debited account is always listed first, and then the credited account is listed second. Always, always. This is the way we fill these out. This is called double entry accounting. So with every transaction, you're going to have at least 2 accounts that are impacted. You always list the debit first and the credit second. Always. You put the date with the debit amount, and the source document goes with the debit amount. As you look through these documents, as we make this general journal, you'll be able to see exactly where each transaction is by the date. Also, because credit is the second column, debit's on the left, credit's on the right. Credit is on the right. It's like indented. You also indent the title of your credit account. It's indented so you can see clearly where each account starts and ends. Okay, so that's all there is to this one. You can check your answers. Look right. It says up here, score 3 of 3. Okay, so now you can go on, save and continue, and I'm going to let you do the on your own. On your own. I'm going to let you do that one on your own. All right, and submit that. Once you've done that, submit that. And then we're going to go, I'm going over here to 3-2. Same thing. Here's lesson 3-2, and I'm going to working papers. Work together, and this is on page 69 of the book. Now here's what's happened. Look, we have Norma Dirks again. Owns Dirk Copy Center, just like we did before. Using the information, they want us to journalize. Look, there's the general journal and what we've already done. This is what we did in 3-1. Journalize each transaction, continuing on the next blank line of page 1 of the journal. Check is a C and memorandum is an M. All right. And then it says entries from work together -1 are provided. So that's what we did before, just a minute ago. So now we've got 3 more transactions, different kinds of transactions, to have the same chart of accounts as we used before. So these are the only accounts that we can use, the same ones for Norma Dirks that we used in 3-1. Book shows you exactly how to do these as well, okay? So let's see, we lost our DC Adler, so I'm going to put that over here again. Debits have to equal credits. This first transaction says bought supplies on account. Okay? So that means supplies are assets, they're going to go up, but a liability is going to go up because the account payable. You're not paying cash for it. You're saying, I will pay you in the future. I will pay you in the future. So this is for April the 5th. We're going to put here the 5. Now you don't have to put April. This is just continuing on. And keep in mind that these are chronological. Starts with the first of the month and goes forward. Sometimes you'll have 2 or 3 transactions in the same day. That's fine. You list them together. All right, but for this one, we're buying supplies. So supplies are going up. It says that it's M1 is our source document. Memo number 1, that we owe $600 now to Supply Mart. But it's $600 worth of supplies that are coming in. Then, this is, when we go to our chart of accounts, you'll see that there's one here, accounts payable Supply Mart. You have to put the dash between them. That's exactly the way they want it written. Okay. So I come down here and I put accounts payable Supply Mart. Debits equal to credits, and this is saying that Norma took $600 worth of supplies and gave Supply Mart a promissory note or an IOU that she would pay them back later, $600. Okay, the next one. Paid cash for insurance. All right, so we have insurance. Now, for this one, insurance is an asset. You're buying it. So that's going up, and it's an asset. It has value. You own it. But cash is going down because you're swapping out one asset for the other. Okay? So I go back to my chart of accounts, and I see here, right here, prepaid insurance is an asset. Prepaid insurance. And that's the way I have to write it in here. This is on the 7th. The 7th, and I have prepaid insurance. It is prepaid because you have to buy it now for it to cover you in the future. Not get insurance and say, oh, I want it to cover me the last 3 months. It doesn't work that way. All right, this is $500. Debits equal credits. And it tells me here is C2, check number 2, which is good. We have a check 1 here that we use for supplies, and then we have check 2. Now, these need to stay in order. If if it automatically switched to C3, then I'd want to know what happened. What had happened to check 2? Did somebody write money for something that was not business related and stole my money? So you keep your checks in order. Check 1, check 2, just like you keep your transactions in chronological order. Okay. Next one says paid cash on account to Supply Mart. All right. So with this one, show you what happens here. With this one, cash and then account for Supply Mart. So we have accounts payable for Supply Mart. We just used it here on the 5th to buy some supplies, and we said we'd pay them back later. Well, the other one is cash. Okay, it says $300. Paid cash. So cash is going down. Well, accounts payable is going down too. Okay, and what I want you to see, here is that, well, let's fill this in. I'll show it to you. This was on the 9th. Accounts payable Supply Mart. We paid cash. We gave them $300. Or Norma gave them $300. This should be check number 3. Sure enough, check number 3. Okay. Debits equal credits still. And you'll notice that debits equal credit all the way down. It's like steps that go all the way down. That's the way it should look. Also, you'll notice that right here was the Supply Mart accounts payable, and here's the Supply Mart accounts payable. Here, accounts payables, they're liabilities. You got to pay them later. That's a credit balance. They increase on the credit side. But since we put it on the debit side here, it actually subtracts from it. So now we go and we look at the ledger, which is like an index card for the account, and it shows that we owed them $600 on the 5th. But then it shows that on the 9th, we paid them $300. So now we only owe them $300. We're not going to go back and keep paying that $300 over and over and over again. We're just going to pay off until we get it paid to zero. That's all we want to do. Also, Supply Mart, they're perfectly fine with us making a partial payment because they get their money, and that's a good thing. It's a win-win for both of them. Okay? Norma got her supplies. Supply Mart got some of their money back, and then Norma will keep paying until she's got that paid off. All right, so that's it for 3-2. I'm going to save and continue, and erase this stuff and let you go back into the on your own and complete that yourself. Okay, works the same way as these did that I just showed you, and they're in the book. You can go back and watch the video all you want. I would suggest that you keep the DC Adler close by so you can see which side of the equation the the accounts increase. The opposite side is where they decrease. Okay, until next time, stay safe and stay well. I'll see you later.